I'm Charlotte McLeod with investingnews.com, and here today with me is Steve Barton, host of In It to Win It. Thank you so much for being here. Great to have you in person for the first time.
Yes, yes. Thank you for having me. I enjoy our talks.
Me as well, and we're here now at the New Orleans Investment Conference, and we've made it to the third day. So I thought we could begin by getting a sense of your take on sentiment on the show floor, any key takeaways that you have so far.
Yeah, this is very busy. I've talked to people that have been here for every year for over a decade, and they've told me that this is the busiest that they've seen it. So I think that's a little telling. I don't think it's a coincidence that, we recently had gold at all-time highs, and now we have record attendance here at the conference. So, that might be a little kind of indicator.
Yeah, I would agree. And I think everybody's telling me the same thing about how busy it is. All right. Well, we recently did an interview talking about your different takes on many of the commodities you cover, including gold, silver, uranium. So people should go back and take a look at that interview if they want to see it. I think there's still lots of good information there. Today, I thought, though, since we're at the conference, we could talk a little bit about your due diligence strategy when it comes to events like this and companies. And where I wanted to begin, we were talking ahead of this conference, and you were telling me you were looking through the companies, the list of companies, and deciding who you're going to go talk to. So let's begin there. And when you are making your list of who to approach at the show, what are you looking for?
Basically, I'm looking for, well, first off, I use AI to kind of separate some of them and kind of separate the wheat from the chaff. And, if anyone's interested, they can contact, I can give them the prompts. But basically, I'm looking for big targets, big deposits. I'm looking for people that have done this before. I'm not trying to pick the guy this is his first run. I want to pick the guy that has done this multiple times successfully before and is looking to do it again. I think that's probably the number one thing that I'm looking for is I'm looking for the people, their experience, and they're trying to do it again. I think that's the biggest thing. And then number two would be, what is the deposit? What is the size of it? Is it growable? Is this something that could be a possible 10-bagger?
All right. So you come to the show, you've got a list already of the companies that you want to approach. And when you go to them, what are the questions that you're asking? Do you have a set list of questions you ask to each company? Are you specifying it for the different companies out there? How are you doing that?
Well, I knew you were going to ask this question, so I brought my list, and this is exactly what I do. And now, caveat, I didn't come up with this. I asked people that are smarter than me what they do, and I wrote it down, and now this is my routine. So I got this from Jordan Royburn. I start out with market cap, cash, and debt. That'll give you an idea of the size of the company. A $15 million company is going to be much different than a $400 million company. Are you undervalued? Why are you undervalued? How are you going to create value? Right? What separates you from all these other companies? And that, if you initially start out with that, will kind of separate the guys that are maybe giving you fluff and the ones that are really passionate about the project and really understand it, right? After that, then I go into their experience, right? What is your experience? Have you done any projects that are similar to this? If he used to be a uranium miner and now he's going into copper, that's not real relatable. Does that make sense? But if he's successfully built 4 copper mines and he came out of retirement to build the 5th, that's very relatable, right? What experience does his team have that relates to this project? Who owns the company, right? How much do they own, right? And don't be afraid to ask the CEO, how much do you own? Because these are very easily searchable, and you can find out exactly how many shares he does own. And it's a real quick way to find out, like, is everything lining up and jiving, right? Do they have any vested partners, right? It are companies like Barrick and BHP and Vale, are companies like that invested in this project. That's extremely important, right? They have a due diligence team that far exceeds anything that we could do. So if they see potential in this project and they're investing in it, that tells you something, right? We want your company's scalability. Basically, how big is it? So now you're kind of getting into the geology. Is this something that can be a small mine, or is it going to be a big mine? And we're interested in ones that are big mines or have the potential to become really big mines, because that's where you make your money. What is the biggest unanswered question? And, I got these from Rick. Like, what is the biggest unanswered question facing your company. For example, most of the time, these companies here, they're going to be saying, "Well, we want to know if the South pasture is the next target. How are you going to find the answer to that? We're going to drill it out. How much is that going to cost? It's going to cost $7 million. Well, you told me that you only have $2 million in cash. Where are you going to get that extra $5 million? Does that make sense? So if you can kind of follow that outline, and this I got from Jordan and I got from Rick, and just follow it like that, that'll give you a really good idea of what they have to offer or not.
I think that's a really good list. And I like that you note that the questions come from different people. So people who are out there can also use this list. It's okay to ask the same questions as other people. I think we can get a sense of what red flags might come up when you're talking to the companies just by thinking about these questions. But anything further you'd say on that note in terms of red flags that might pop up when you're talking to companies or out there looking on the show floor?
I get kind of a general feeling, and if you get the feeling that something just doesn't feel right, go with it. Trust your gut. It's tough to articulate how important that is, but if you can how do I feel when I'm talking to this person? Do I get the feeling that they're authentic, or do I get the feeling that they're hiding something? And what questions on this list can I dial in and find out what exactly that is? Because, there's no perfect project. There's no perfect anything. What you're doing is you're betting on probabilities, and you're putting your hard-earned money to work with this other company. You want to make sure that they have a work ethic that could support that. So one of the things that I do every morning and every evening before I leave here is I walk into the room, and I see who shows up at 8 o'clock in the morning, and I see who's still there at 6 o'clock at night, the duration of the conference. And, I give a little leeway. I mean, maybe they're in the room doing private placement deals or something like that. But if you consistently see companies that don't show up until 10 o'clock and then they're out the door at 3 p.m., that's not the kind of work ethic that I want to invest in. I want to invest in the guys that are hungry, and they're early and they leave late. Just hoping that one more guy will come along and ask about their company, and they're so passionate about it. That's the team that you want to invest in, not the guys that are coming in late and leaving early.
Yeah, yeah, I think that's a good one. I think, and everyone can put that into practice as well if they're at these events. And on that note, so I know that not everybody can come to events like this and have the face-to-face time with the companies, but it's very valuable. And for investors, it can be maybe tricky to decide when it's expensive to travel where you're going to go. So I wanted to ask, you've been to a number of conferences over the years. Do you have any favorites for meeting companies? Anything you would say there to help people make choices on where they might want to go?
This and Rick's conference are my two favorites, and they, yeah, are by far my most favorite. They're very intimate. It's not a giant football stadium worth of companies, which is kind of nice. It's a little more intimate, and you really feel like at the end of the conference, you have a feel for the companies that you wanted to talk to. You got to. So I would say that these two are definitely my favorite. But Brian has definitely won the award when it comes to food. This is the best food that I've ever had at any conference, hands down.
Fair enough. Fair enough. I think, yeah, for sure, hard to beat. All right. So going back to your due diligence process. So you've gone out, you've talked to companies. Once you decide to make an investment, how are you doing that? Can you talk a little bit about your strategy in terms of if you're buying all at once in tranches? How does it usually look?
It depends. Generally speaking, what I do is I'll buy in tranches. I'll find a company, I interview the experts, and if I notice that, a lot of them are talking about the same company, okay, I probably need to be in this one, right? And as a technical analyst, I'll look on the charts and I'll find entry points to try to get the cheapest buys possible. And what I do is as the price gets cheaper, I buy more. So that kind of gets you into the black pretty quick when the story turns around, right? I will, however, buy all at once if I think it's worthy. And an example that comes to mind recently is Banyan Gold. They were out at Rick Rule Symposium, and I had been following the story since here of last year. And the unanswered question for me was, where's their starter pit? They had a 7 million ounce resource, but it was all kind of spread out evenly. But what you need in these companies is you need like kind of a starter pit. You need a vein coming up with a lot of it right there so that they can show this to a bank and they could say, hey, this is where we're going to repay you in 2 years and this is how we're going to do it, right? Well, they found it. I was one of the first people to find that out, right? So I put out the video and I put it out to my subscribers and I'm like, hey, this is it. So that is an example of where the unanswered question was answered. And honestly, I didn't even look at the stock chart. I had my answer. And so I felt much more comfortable just buying a position instead of scaling in and using my normal method.
Yeah, yeah, and that just shows how the process can really work well for you. All right, and of course, as you've been saying, every company is different. Your approach would be different in different scenarios, but in general, what is the timeline that you're looking to hold a stock for?
I would say about 90% of my portfolio is a year or more, and about 10% is trading. So at least a year. Yeah, minimum. But yeah, I mean, some of these things you got to have patience. One in particular I'm thinking of, I've held for over 4 years. I'm getting ready to finally offload a pretty big position. I've already moved what Rick would call past the point of concern, so it's a has a zero cost basis for me now, and it's 2.5% of the portfolio, right? So, but yeah, years. You need to be patient. You need to follow the story. There's always going to be these little things that come up. Oh, they had a city council meeting and now the stock isn't trading. Well, as soon as it does, a lot of people are probably going to dump it. And if you really believe in the story and you follow it, that's the time to strike and buy more. You got to follow these things. You got to be patient. You can't be shaken out unless one of your questions is answered and it's not what you were looking for, then you get out.
Yeah, yeah, and this is going in the direction I was hoping to as well. I think maybe this is the most important part of the interview is knowing when to sell. And in a previous interview, you talked about having a thesis for each of the companies you invest in. And we talked about that, but I think it's worth bringing up in this context as well so people can understand.
Yeah. So for every commodity that I'm invested in, and again, I didn't make this up. I got this from Adrian Day. I got it from Rick Rule. I got it from John Polamy, and I do it myself now. And I advise everyone else that cares to do it as well. Is write out your thesis for the commodity. So why do you own gold? Um, and most importantly, when would you sell it? Right? Why do you own silver? When would you sell it? Why do you own copper? When would you sell it? And then do the same thesis for each company that you own. Right? So as things progress with the company and some of those questions get answered, it really gives you you already know what you're going to do because you've written it down and you basically just follow your sheet. And that's basically it. You write down your thesis and then why do you own it? And when am I going to sell?
And when you sell in general, are you coming out in tranches there as well, or all it probably depends on the company?
It depends, yeah. So if something changes in the narrative and it turns out that I was holding this company because I thought that this was a big tier one deposit, and then we find out that it's absolutely not and it's a goose egg, then I'll just let the whole thing go. It doesn't matter if I'm up or down, right? But in another one, an example that I'm thinking of is Rio 2. They're not here, but I bought into them 4 or 5 years ago, and they're getting close to production. Well, the most valuable time for that is when they go into production because they have all the gold in the ground, and that's as most valuable as it's going to get until they drill it out and show that they got more, right? So I've moved past the point of concern on that one. Now it's free. So that one I'm kind of tranching out. I guess it just depends. I also use technical analysis a lot, so I'll look at the charts and, there's indicators that I look for. If you have an RSI on a quarterly time frame that's above 70, that's when alarm bells are going off in my head and it's probably time to trim, So I use both the fundamentals and I use technicals. I guess the fundamentals, I like to say, tell me what I should be buying and focusing on, and the technicals tell me when I should be buying and when I should be selling.
Yeah, yeah, I like how you bring those two approaches together. And as we're getting to the end here, just another question about the conference. We've made it to the third day. I wonder if you have had any good conversations on the show floor that you can share, or interviews that you might be doing for your own channel that we should look out to. Anything you can mention there?
Yeah, I just interviewed Tara Christie of Banyan Gold. Seems like all systems are go there. They continue to drill out. They continue to make the project bigger. Full disclosure, I own the company. So I like that one a lot. I'm very curious. I'm going to be interviewing Robert Quartermain here in a couple hours. He's the CEO of Dakota Gold. I just went to their presentation. It looks pretty promising. I've been studying up on the company. I interviewed him here last year. I still don't own the company yet, but I think maybe that kind of goes to what it is. You don't, as soon as you hear about it, you don't have to buy right then. You can take a while to study these projects and really understand them. Those are two that are coming to mind right now: is Banyan and possibly Dakota Gold.
All right. And here's a fun question that I'm trying to ask everybody here. If we look forward to 2026, what would be your pick for top performing asset of the year, commodity or otherwise? You can choose.
I would probably say copper. Copper has had a decent 2025. I think it's going to have a really good 2026. I'm not as worried as I was a year ago about the recession hitting copper. I know that's kind of a common theme. I think copper's going to do pretty well. It's at it seems like just an average Tuesday that it's above $5 a pound, and a year ago that was not the case. It was making $5 a pound was a new all-time high, and now that's just the normal case, and I think that's going to continue. I think that 2026 is going to be a pretty darn good year for copper. So, if you have any of those gold and copper projects, I think they'll do better than just the primary gold ones.
Okay, okay. I think that's a good choice. I've had a couple of coppers come up already. So I will let you go and send you back out onto the show floor unless you had any final thoughts. We'll have links to your channel and your technical analysis course in the video description. So anything you would add about where to find you as well.
Yeah, you can check out the technical analysis course. Getting a lot of positive feedback on it. It's helping a lot of people. Basically, it's a beginner's series on how to read the charts, and knowing when is a good time to buy and when is a good time to sell, which is kind of the whole game when you think about it. If you can have a much better understanding of that, it really adds to your bottom line a lot, and it's really not that difficult. I mean, it's kind of like my brother said. Calls it his kindergarten method. You sell at the top end of the chart and you buy at the bottom end of the chart, and there's certain little indicators that give you a lot more certitude to that. And yeah, the first 30 minutes of the video series is just me literally showing you click by click how to set up the charts, and then the next 2.5 hours are how to read them. So yeah, check it out. I'm getting a lot of positive feedback. Thank you for having me on the show, Charlotte.
Of course, this was great. Thank you so much. And once again, I'm Charlotte McLeod with investingnews.com, and this is Steve Barton with In It to Win It.